Last week, the S&P 500 fell 1.70%. The Nasdaq and the Dow Jones both dropped 2.5%. U.S. stock prices slumped last week to record their worst weekly performance so far this year, as fears grew about fresh tariff threats amid signs of declining consumer demand. Crude oil prices declined, but natural gas prices pushed sharply higher, after freezing weather in the U.S. caused supply disruptions. Gold and silver prices continued to rise amid concerns over a trade war and geopolitical disagreement between the U.S. and Europe over Ukraine. Meanwhile, palladium and platinum prices impacted by trade concerns and the possibility of sanctions being eased on Russia, the leading producer of metals. The release of U.S. GDP figures on Thursday and Friday's Producer Price Index figures could cause market volatility this week. Traders were somewhat reassured by the meeting between President Macron and President Trump, appearing to agree on a common approach to the war in Ukraine, as talks between Russia and the U.S. continued in Istanbul. Over the weekend, German elections were won by the Christian Democrats, who will likely form a coalition with the Social Democratic Party. Nike's stock price climbed 1.75% to record an almost 3-week high late last week. The move higher comes amid CEO Elliott Hill's drive to return the company to its core sporting values. Early last week, news that Nike had announced a partnership with Kim Kardashian's Skims brand in a move to gain a new market segment boosted the company's price. The global brand also revealed last week that it would release its earnings on March 20th. Coca-Cola's stock price increased 3.3% and rose to a 4-month peak on Friday. The company's price has been rising since it reported much better than expected earnings results on February 11th. Coca-Cola revealed an optimistic outlook for the year ahead and announced plans to expand into new and emerging markets, particularly in BRICS nations. The company is also investing in digital technology, including the use of AI to improve efficiency and profitability. Crude oil prices edged 0.1% lower, ending the week at a 1-week low. Prices were volatile throughout the week, initially rising after Goldman Sachs suggested that OPEC was likely to extend current output cuts, rather than increasing supply as previously planned for April. However, with tensions in the Middle East declining, and with the U.S. pushing ahead with a plan to end the war in Ukraine, Russian oil could return to the market in the event that a deal is signed. Rising U.S. inventories also pressured prices lower. Gold prices rose by 1.9%, with the precious metal hitting another all-time peak of $2,954 on Thursday. The U.S. administration issued new statements regarding the implementation of steel and other tariffs and outlined that more announcements would be made as early as next week, sparking concerns about a potential global trade war. The U.S. also moved forward with its plan to end the Ukrainian war, but Ukraine and Europe were excluded from negotiations with Russia and seemed to disagree with the American approach, which is seen as too pro-Kremlin. Silver prices climbed 1.4% amid rising geopolitical tensions and evidence of division between the U.S., Europe, and Ukraine on how to approach to peace negotiations with Russia. Fears of trade war also boosted silver on a safe haven instrument basis. So far this year, silver prices have been supported by industrial demand, fueled by a healthy global economy, and a forecasted supply deficit in the silver market in 2025. The USD-JPY pair decreased 1.7% to hit a more than 11-week low amid demand for the safe haven yen in a week of geopolitical tension, as the yen outperformed all of its peers. Expectations for the Bank of Japan raising rates by September rose to 98%, and better than expected Japanese growth further strengthened the yen.